If we add the chart of the S&P 500 on top of the chart of Bitcoin, we can see that there's quite a strong correlation between the two assets. People sometimes think that Bitcoin moves separately from stocks, but history shows that Bitcoin typically follows the stock market, both in good times like 2014, 2017, and 2021, and also in tough times like in 2019 and 2022. And we can also see this statistically. This chart shows Bitcoin's average weekly returns compared to the S&P 500. The S&P 500's returns are split into 5 groups, from worst on the left to best on the right, and the chart shows how Bitcoin performs in each of these cases. When we take a look at this data, it clearly shows 3 key relationships. First, when the S&P 500 goes down, so this worst group on the left, Bitcoin tends to perform very poorly as well. Second, Bitcoin performs well when stocks perform well, like we see in these last 3 groups. And last, Bitcoin actually performs the best when the S&P 500 is showing a moderate rise, like we see here in the center group. When markets are rising steadily, so stocks aren't moving up too fast and stealing all the attention, investors look for higher returns in other assets, such as Bitcoin. So if Bitcoin's rally is going to last, the stock market needs to be moving higher too. The question now is, do we have any clear signs that the stock market is ready to continue moving higher? For that, let's look underneath the hood of the stock market. One of the most effective ways to do that is by looking at something called market breadth. This is a measure of how many individual stocks are participating in a move, not just how far the index itself is rising. Think of it as the difference between a rally led by just a few big names versus one where most stocks are moving higher together. A great way to track this is by looking at this line that shows the percentage of S&P 500 stocks trading above their 50-day moving average. When this line is falling, it means that fewer stocks are participating in a move. And when it's rising, it signals broad participation, which is a key ingredient for a sustainable rally. Recently, market breadth went 5% to over 60%, indicating a major switch in bullish momentum. This is called a breadth thrust, where there is a sudden surge in the number of stocks participating in a rally. In the past 10 years, we've seen such breadth thrust only 5 times. Here in October 2015, January 2019, April 2020, July 2022, and November 2022. Now, if we add the S&P 500 on top, we can see each of these signals occurred near the lows. In January 2019, April 2020, and November 2022, the stock market had already put in its lows before steadily moving higher. Whereas in October 2015 and July 2022, the market experienced a brief undercut of the lows before actually bottoming,